It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, October 15th, 2015. Squeezing out the last few drops of this full third week of the month of October. Remember, Halloween is just a couple of weeks away. Don't be the last one digging through the bottom of the barrel to get your Halloween costume right. I'm going to remind you again next week. Don't you worry. Bottom line, we've got one more day left in this what has been a very successful week. I got a jam-packed newsletter in store for you. Crude oil is bullish after sellers failed at yesterday's range lows, and now we have a strong bullish trend going into Friday's session on the oil. How about the S&P? Extremely bullish this evening after buyers clearly ran some stops above the big round number of 2,000. So our plan will be to look for a measured correction, some possible bear traps. We get a really significant volume support area I want you guys to see for Friday. We get a plan for the E-mini. How about the gold? The yellow metal, range bound. Finally taking a pit stop this week. Slight bullish tone on gold this evening, which means our plan will be to fade all the breakouts using the range levels and the range expansions on Friday. We'll see if gold is finally ready to take a little bit of a nap here tomorrow. We'll see. And then, of course, the euro, the 6E, range bound this evening with a clear volume profile. A relatively rare situation happening on the euro right now. Can't wait to show you more about that. We have a clear volume profile that's giving us some great clues for where to expect the range rotation on Friday's session. As you can tell, we get a plan for crude, the E-mini S&P, gold, and the euro. But you know me. Before we jump into our charts and get this strategy for tomorrow, I do want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link in the description of the video, and that'll take you over here to our trading blog. A couple things here. First of all, I would love to invite you to come out and test drive our live trade room next week as a guest. Grab a free pass, come out and test drive the trade room as a guest. Upper left-hand corner, lower left-hand corner, right above my ugly mug, pardon that. You can register for our nightly newsletter mailing list. All I need is your name, a real email address, and then I need you to check your inbox. I'm going to send you a verification email to make sure we get approval to keep sending you emails in the future. And then right below the video tonight, you'll see a spot to download all the charts that are going to go along with tonight's video. How nice is that? Have those charts ready to be used tomorrow. And then don't forget, on the right-hand side, you can register as a new trial member. You can learn more about our 3 levels of membership here at schooloftrade.com. And, of course, you can read member reviews. And you know we always have someone standing by here 24/7, 365 to give you guys a hand. As I always say, there's no question too big or too small to ask on our live support if you need any help. Qualified people are waiting to help you guys out there. All righty? I think we've covered all the bases here. Now you know all the who, what, where, when, and why. Shall we jump into this thing? Now, tomorrow is a Friday session, which means we do have early in, early out. Remember, Fridays are a half day for day traders. The reason is because in the afternoon session on Fridays, volume gets much lower. And usually we are lower on sleep or lower on patience. It's kind of a funny, it's a very interesting and a very common sense situation. Late in the day, late in the week, we aren't making good decisions. And that means other traders aren't making good decisions. And it becomes a very just unpredictable environment. So be careful tomorrow morning after 11 o'clock. So early bird special on Friday morning. And, of course, we'll be going into a great fall weekend here. Boy, we've had a great week. Let's jump into crude oil this evening. Crude oil is bullish after sellers failed at yesterday's range lows. And now we have a strong bullish trend going into Friday's session. We have completed the measured move higher, so the best buying opportunities are going to come after a measured correction off the highs into support zones below. Now, keep an eye on the volume pullback area right around that $46 a barrel, and be aware that a failure on that pullback will send us all the way back down to $45.29. Now, first of all, we can easily see, and we saw this morning in our trade room, it was a really interesting morning session. We knew we were bearish, but we also couldn't quite get a grip to the downside. It felt like they were fishing for something down here, and well, I guess we found out what that was, wasn't it, right? After the news came out, slammed that thing right back to these highs. So when you look at this, you could look at this as just one big trading range, and so we get rotation back and forth, right? So that's definitely one way to look at it for tomorrow. Yeah, I think you're a little bit ahead of it, though. There's really no range high. There's really no, there's a little bit of a double bottom there. We never really get the flattening moving average. It's difficult to call it a range right now. You're going to see some ranges, don't you worry. We're going to show you guys some ranges here on this later on tonight. But the reality is, though, is that really what we have is we have a rotational environment. We have the market that rotates lower, and then just like it's tied to a string, just shoots right up through the highs. One of the biggest reasons why I don't want to call this a range, and you're going to see this on gold as well, we have a spike in channels sending it back to the high. And those spike in channels, they're no joke, as you guys should know from gold, right? We got 2 in a row, big winning trades off gold this week because of the spike in channels. So spike in channels are they're strength clues, right? They're not messing around, right? So we see that spike in channel up here, and that definitely tells us now, and that's where we get this measured move higher from. So it's very obvious here. I wouldn't call it a trading range, but I will definitely call it a bullish rotational market, right? Rotates lower, almost as if to get price into a better spot to buy before the inventory number came out today. Again, we kind of picked up on that early this morning, and then after the news came out and we saw price get above the moving average and hold above the moving average, you pretty much knew that was the case. Now, what is very interesting here, though, is the volume, because the volume ultimately looks like a range-bound market. If you didn't know anything else besides that volume, where do you see the most amount of volume? Right in the middle. Right in the middle of that range, right? And that's why I'm saying that 46 area is really where I think that's where I think the most important information is going to come here tomorrow. The bottom line is this: whether you think we're in a trend or in a range right now, we get a couple options. I've got a bullish market right now coming out of news here today. We're already up to that measured move, so we're going to be expecting here a measured correction back down. How far will that measured correction go? Well, if I had to guess right now, I would say right about this 46. Now, if we can't get going from there, then of course we have the failure down to that 45.29. So 46 is definitely where we're going to be looking for that measured correction. And then from there, I'm going to be looking for counter trend failure, right, to get back into the long side here on the crude. So looking at a trending market notes here, again, measured moves, right? We got the measured move up. Now look for a measured correction. Okay, easy enough, easy enough. Channel rotation. We have a big bull channel. We expect to see price rotate. Channel low, channel high, channel low, channel high, channel low, channel high. I think we're probably going to definitely see some support down here. But again, because of such strength today, I would imagine, though, we're going to get that measured correction back down before we get that next push higher. Overshoots and undershoots, no need to worry about that right now. We've done complete rotation to the high there. We do expect the rotation back down, and then the measured correction back down, right, will give us the overshoot at the low. Measured corrections, we talked about that a few times already. Counter trend traps, this is a big one. Counter trend traps. During this correction, you're going to see some sellers try to sell into that correction. When they fail, those counter trend traps are going to be everywhere, right? So what you want to think about right now is follow the direction of the trend until proven otherwise. Okay, speculation, we can speculate the failure right now, but we have to focus on the trend first. Make it prove it. And as this price pulls back, you're going to get sellers who are unaware of that bullish trend. They're going to try selling into that 46, and that's where you want to look for what I call these counter trend traps, right? Now, don't get me wrong. If you want to play with fire a little bit here, you can definitely sell into this correction. I do believe, though, that is the lower probability trade. If you're going to sell, your best bet here is going to be to wait for the buyers to try to buy that volume pullback and then fail. That's going to be your best bet to be a seller here. I'm not a big fan of counter trend trading, as you probably have learned about me. Volume pullback, again, the most amount of volume I see on this chart right now is right around that 46. If I had to guess right now, I would imagine that's where we get that correction back to, right, that volume pullback. And then again, watch for failure. Watch for failure. When we pull back here right now, right, we pull back to 46. Again, seller failure, that's your proof to be a buyer. Buyer failure, that's your proof to be a seller, right? So we may definitely see a little bit of a battle zone happen here. And remember, during this correction, you don't need to be the first one in. You can wait a little bit longer because we've got plenty of room to go back to the high or collapse all the way back down to that low. So stay patient and wait for proof. One last thing about this crude right now, again, bullish, measured correction, volume correction. We do have rollover on our radar right now. Now, usually between the 16th and the 18th of the month, every 1 month, we're going to get rollover. As of right now, I'm seeing volume looking like we're about the same. We're still above volume here by about 100,000 contracts on the CL 1115 right now. So I would assume tomorrow is going to be a day on the November 2015 contract. But at the end of the day tomorrow, though, you want to be proactive and roll that market forward to 1215. All right. I'll remind you again on Monday night of my next newsletter. But just so you're aware, though, at the end of the day tomorrow, you should be okay there to roll that market forward to that 1215 contract on the black gold. Don't forget, if you're trading crude oil, I'd love to have you out here with us tomorrow in our live trade room. Now, how about this S&P? What are we going to do with this thing? This is an interesting one. This is a definite interesting market. Clearly, we get a little bit of a stop run there into a spiking channel. What are we seeing here? The E-mini S&P is extremely bullish this evening after buyers clearly ran some old stopolas above the big round number of 2,000. So our plan will be to look for a measured correction, again, into that volume support on Friday. This is a really big measured correction. You can see that volume pullback is actually right around that 2,000. Boy, those sellers got smoked, getting stopped out right above 2,000. You can see that's clearly where all of these stop losses were hanging out, right in this area right here, right? Selling that 2,000 area and placing their stops right about there, right? Bam, just takes off to the upside. And if you look at the timestamp on it, it didn't happen until after the morning session. So you did get a couple easy shots there of selling what was yesterday's channel high. But after we tried twice to go lower and this thing couldn't keep it, you knew this was coming, right? I mean, it was very easy to see the sellers just weren't successful. They weren't having much luck on this today. So the S&P is extremely bullish, running those stops above 2,000. So now we're looking for that measured correction back down to our support areas before we even want to think about being a buyer again. The hard part right now is that there's nothing keeping this market from completely tearing this up to the upside, but I'm not going to buy this thing. I'm not going to buy the nosebleed seats like this, right? If you've watched my newsletter over the years, you know there's always going to be time to wait for a pullback. You might not get it right now. In fact, newsflash, you might not get it tomorrow morning in the first 5 minutes of the market. You might have to wait patiently for it. But guess what? Your grandmother was right. My grandmother was right. Patience is a good virtue. Good things come to those people who wait. So wait for that. Be patient. Wait for that pullback. This market has pushed higher so quickly today that we can only wait for the next big buying opportunity after a deep pullback. That's where the smart money is going to be getting in. And with the highs of the range lining up perfectly with that 2,000 level, along with the volume pullback, I mean, that's where you really got to be looking for this, right? So think about this. Volume profile shows me we get a volume spike down just below 2,000. We'll call it 2,000. Then, of course, you've got this trading range we found here. Can you see this, though? A big breakout pullback? I mean, geez Louise. I would definitely be expecting to see if this thing makes it all the way down here. We'll see if it pulls all the way back tomorrow. It may be a multi-day pullback here. Seller failure to buy, right? That's that counter trend trap I keep talking about, right? And so we're looking for, again, a measured correction into that pullback. This is going to be a bit of a challenge tomorrow. This is really going to be a bit of a challenge because this market is clearly irrational right now. So what you got to do right now is stay patient. And what I'll be looking for tomorrow, and we may go range bound here, right? This may just go completely range bound. I mean, think about it. You got to think there's a lot of traders out there that are a little spooked by this right now, and you definitely don't want to chase this. You do not want to be buying right here. You might make money once or twice doing that, but it's not going to be that way very often. It's not going to be consistently profitable, right, being a buyer at the highs like this. So the best thing to do right now is to stay patient, wait for this price to really pull back, seller failure. But if you want to nibble on this thing, look for the sellers to try. Seller failure, you can buy it back up. Come back, seller failure, buy it back up. I'm really going to focus on seeing bear traps. I really want to see these counter trend sellers fail to buy into those stop losses. That's where the short-term trade is going to come tomorrow on the S&P. You got to be a bull right now, just not a bull right here. So measured moves right now. I mean, we have no measured moves here, at least not for the time being. There's not a lot to work with right now. Now, I'm a little bit guessing on this bull channel. You can see this big channel here. I'm not going to lie, guys. I'm reaching right now. And when I'm reaching, you know what that means, right? That means other traders are also going to be reaching. Yeah, newsflash, everyone else in the market is just like you and I, right? We're all sloppy human beings that are trying to use whatever we can use to make a dollar, right? That's literally all it is. We always assume that everyone else is just some brainiac Mensa candidate, right? They're not. They're not all rocket scientists. I'm sure there are a few out there, right? No offense to the rocket scientists in the room. But we know that the average trader out there is going to be reaching just like we are to find something to sink our teeth into. So measured corrections, channel rotations, right? I expect this market now, if this channel's correct, again, I'm reaching here right now, is pull back again, lower that channel, then back up. So we know where we want to be looking. We know where I want to be trading here. We'll see if we get a chance to do it, though. Measured corrections, and again, I think your smartest money is going to be risked with seller failures tomorrow. I think that's where, again, assuming we don't get down to that 2,000, right? Hey, we might. And if we find our way tomorrow down around 2,000, great. Look for seller failure and be a buyer here after the pullback. But assuming what's probably going to happen tomorrow is we go sideways here, you're looking for seller failure, right? Seller failure, and just keep waiting for those sellers to try to reverse this thing and, of course, buy right into their stop losses. So watching for seller failure and then waiting for that proof, right? And that proof is going to come when those buyers hold that moving average again. If you're a student of mine, you know exactly what I'm talking about, and I look forward to speaking with you guys more about this and trading this S&P in tomorrow's session. Let's keep moving. Now, you wanted a range, now we got a range. Gold is completely range bound with a slight bullish tone this evening, thanks to the third day in a row of a bullish spike in channel. I know, kids. You got to go back a long time to see 3 days in a row of spiking channels on the yellow metal. So we have a slight bullish tone this evening, which means our plan will be to fade all the breakouts using the range high levels, range low levels, and range expansions on Friday. Buyers have been busy this week, right? Today was the second day in a row we get that deep pullback on gold. Second day in a row of getting that spike in channel. It's been so easy this week on gold. You almost got to think, boys, it's got to hit the fan eventually this week, and it looks like tomorrow might be that day. So we're definitely looking for that range-bound market now as this market kind of finds a resting place after a very, very bullish week here. Our plan is to use failure patterns to fade the breakouts while keeping an eye on the 2-try rule because, knock, knock, that's 1,200 right above us. I know, right? It's been a while since we've seen our old friend, the old 1200, right? There it is, right there. So we know that's only a hop, skip, and a jump away, and we know that's going to be a price magnet. But for right now, though, we have a range-bound market. Whenever you see a trading range, flat moving averages, you want to think fade every breakout, look for failure patterns. That means as this price goes down, I'm looking for seller failure to buy it back up. As this price goes up, I'm looking for buyer failure to sell this thing right back down. Looking at the volume profile over on the side, now pay attention to this one because this is a really good example of what we typically see on a range-bound market, right? Volume is just smack right in the middle. Hold on, though. Wait till you see the euro. The euro is very interesting in a double distribution volume. You're going to learn something new on the euro tonight, hopefully. So we know we have a range-bound market right now. We know we have that flat moving average, right? Double tops, double bottoms. So our plan is very simple tomorrow. The only scenario, though, that you've got to be keeping an eye on is that two-try rule because we're going to be, again, seller failure at the low, buy the low. Buyer failure at the high, sell the high. Seller failure at the low, buy the low, right? So on and so forth. But we got to watch for that two-strike rule. If I had to guess right now, I would guess we push higher, and that's where we get that two-try rule that comes unhinged up to that 1200. So in a range-bound market, we fade the highs, we fade the lows. Just like that breakout, we fade the range expansions, right? So you got range expansion above, range expansion below. We'll fade those moves out, fade those moves back in. Range-bound market, buy lows, sell highs, think failures. And tomorrow morning, we'll be keeping an eye on that two-try rule to see if we are going to make a run at that 1200 or possibly down to that 1666 area, right? This area down here where we have another range expansion. So we'll be watching for those levels tomorrow, but until proven otherwise, fade those breakouts here on gold. And then here is a very rare, a very interesting scenario that we're seeing here on the old euro. The 6E range bound this evening with a clear volume profile that gives us some great clues for where the range rotation will likely occur tomorrow. We can see the moving average flattened out twice today, very similar to what we saw in crude today. And in between, we saw the sellers grab control, which has created a double distribution of volume, which is our biggest clue for range rotation tomorrow. Our plan will be to buy the lows and sell the highs, looking for failures to push outside this volume range. So taking a look at this chart right now, remember we saw in gold? We saw volume right in the middle on gold, right? What do you see right now? Kind of the opposite here on the euro. Still the same result, but this is, in my opinion, this is a much easier market because you're going to get fading opportunities. The original range is up here at 1445 to 1500. That's the original range today. And then we've rotated lower, and we expect to see this price try to make it back into its original range. What I want you guys to keep in mind, though, is that now we have this kind of hidden range in between these two volume spikes. So you've got volume, right? You've got volume resistance overhead and volume support below. If I had to guess right now, that becomes our range for tomorrow. Now, just like you guys, I'm going to wake up tomorrow morning, open up my charts, and we'll see what it looks like tomorrow as the European session kicks off, right? And then, of course, transitioning into the U.S. session. But these volume spikes, though, that we're seeing here create volume support. They create volume resistance. And so we're going to look to fade those breaks as well. So fading the breakouts on the euro, same technique, same strategy for the euro, but a little bit different scenario, right? Same strategy, but a little bit different scenario. Now we're going to focus on rotating between these ranges. Fading the breaks. Again, buying that low with seller failure. Selling that high with buyer failure. So on and so forth, keeping an eye on the two-try rule. So, range-bound market on the euro, look for failures at the highs and the lows. Fade those range expansions, right? Fade those range expansions, those levels above and below. We're going to use range rotation, rotate from low to high to low, right? Range rotation. We're going to use these volume profile spikes, right, for our main highs and lows. Those will make for great targets back and forth. We'll watch for overshoots and undershoots of that range. For example, an undershoot of that range high has produced an overshoot of the range low. And then again, don't forget, we're watching very closely for that two-try rule to see if we're going to end up breaking free of this range-bound market. Guys and gals, it's been a great week here with you. I've had so much great feedback from you guys and gals. Please keep sending me that feedback. How can I make this newsletter a better spot for you to learn and earn every evening, Monday through Thursday evening? Send me an email. I'm JJ at School of Trade. Leave me a comment below the video. Give me a thumbs up, a thumbs like, or a thumbs up, thumbs down. I'd love to know what you guys think of the newsletter. Don't forget, grab your free pass, register for the mailing list, and we are going to open up our trade room tomorrow morning at 8 a.m. Eastern Time, and we're going to trade this plan together with all of our students here. Finally, Friday tomorrow, last day of the week. Like I said earlier, you're going to roll on crude tomorrow afternoon, so be careful of that. Early in, early out for a Friday. And I think that does it here for me. Very, very good week this week. I'm proud of you all following that plan, sticking to the game plan every day, and being disciplined to do it. Guys, while I have your attention here, don't forget, grab your free trial here at schooloftrade.com. You're going to learn more with me in 1 week on my trial than anywhere else on the interwebs. And don't forget, I've got someone standing by here 24/7, 365 to give you guys information about our 3 levels of membership. Guys, don't forget, being successful in the markets is just like being successful in anything else in this life. It's like opening up a combination lock. It's not enough to have just the numbers. You've got to have the sequence, and that's what we do here at School of Trade. It's not enough just to know what day trading is. You have to do it in the right sequence, the right way, managing risk and reward and following a plan. Guys, my name is Joseph. Thanks for being here this week. Go Dodgers tonight, huh? This is a must-win, and we got to pull it out tonight. I look forward to a Cubs-Dodgers. Oh, boy, that's going to be great. What a great time of year. Enjoy the weekend. If I don't see you tomorrow, I'll see you next Monday evening for our next newsletter. Thanks for the feedback. Be well out there. Be nice to each other. Take care of each other. I'll see you next time. Adios, amigos. Bye-bye for now.